On April 15, 1993, Jensen Huang with $40,000 and two co-founders started a small electrical engineering company. Jensen, looking out into the future of computing, saw a need for specialized graphic accelerators that could do more specialized tasks than just a traditional CPU, and the rest is history. Jensen, when starting his company, hadn't even named it yet. As the business started to mature and incorporation became more prudent, the founders settled on the name Nvidia, deriving its name from the Latin word Nvidia, which means envy. So, to understand Nvidia as a business, first, we must always take our medicine and understand Nvidia's product. Don't worry, we won't go into hyper detail, but we will summarize some main points. As you know, or maybe you don't know, all computers, your desktop, laptop, phone, Apple Watch, whatever, has something called a CPU, or the Central Processing Unit. The CPU is your computer's brain, and much like our own brain, the CPU is good at solving one problem at a time. CPUs do general purpose calculations. They are the overarching default processor for tasks in a computer. GPUs, or graphics processing units, on the other hand, work not in singularity, but in parallel. What that means is that more specialized tasks, such as graphics processing, would work better when they are being processed concurrently. The video games we play, for example, sometimes have hundreds of thousands of shapes and color on our screen. If the CPU was rendering each shape in a single file line, then we'd have some slow performance. But with the way the GPUs handle tasks in a parallel manner, we can process multiple shapes at the same time, and as such, have a slower rendering time. Now, not all tasks can be processed in parallel. That is why we still need CPUs, and each individual core in a CPU is much more robust than ones in a GPU. But some tasks can be done in a parallel manner, like rendering graphics, mining for Bitcoin, and even machine learning. Nvidia makes the world's most popular GPUs. In fact, excluding the mobile space, the only other real competitor is AMD, and more recently Intel. Obviously for this video, we excluded a lot of other technical information, like CPUs these days having multiple cores that function individually at a much higher frequency than Nvidia's CUDA cores, or how there has been continual research in gapping the functionality of these two parts. But for most of us, this is enough information to understand the business. Now, if you want to learn more, I have linked some great articles below. My background is in electrical engineering, so take it from me, this field can get very complicated very quickly. Nvidia's GPUs have many applications. As the world is getting more technically expansive, new problems will be better processed in a parallel format. Currently, Nvidia splits its business into four major segments: data centers, gaming, professional visualization, and lastly, automotive. First, let's look at data centers. In the most recent quarter, data center revenue was up 61% from a year ago to $3.81 billion. This is a consistent growth trend for the past couple of years. As discussed, the need for GPUs in data centers cannot be understated. As the parallel processing capabilities are so important when doing complex mathematical calculations, they are very central to modern day data centers. The market dominance that Nvidia shows in this space is likely to progress in the same trajectory. As such, revenue expansion in this segment has a long and continual growth phase left into it. Moving on to the second segment is where we have real short-term issues: gaming. Gaming revenue, which was continually up the past couple of quarters, has dropped off considerably. Gaming, as Nvidia defines it, it is really their retail channel throughput. As I said before, the parallel computing processor GPUs have a lot of benefits in certain applications. Mining for Bitcoin is one of those applications. In the traditional sense, think of GPUs providing thousands of pickaxes for mining, while a CPU can only provide a couple. As such, when Bitcoin's value exploded, it became increasingly more profitable to mine for Bitcoin. Thus, a lot of GPUs meant for the gaming market were being diverted towards mining. Hoarding, scalping, and overall scarcity became common. GPUs sold for 2x, 3x, even 4 times MSRP prices. And then Bitcoin's value crashed. This current downtrend in Nvidia's revenue is due largely to the price of Bitcoin. I do want to mention that when I say Bitcoin, I'm really referring to the larger proof-of-work concept cryptocurrencies that are out there. This included in the past other networks like Ethereum. As mining became less profitable or even started to lose money for a lot of inefficient miners, they started to dump their catalog into the market. And as basic supply-demand tells us, when supply increases rapidly while demand also falls, as no new miners get into the space, prices will follow and fall rapidly. And we've seen that with the GPUs. These days, you can get your hands on top-tier cards or below MSRP. Now, how long does this last? Well, first, we must understand that this is a supply shock. Eventually, as new product lines become available, Just this week, for example, Nvidia released their 4000 series line in the gaming industry. The demand will start to stabilize as these new products take a larger market share in new products sold. Granted, I think it will be weaker than historical trends for the short term, but the eventuality is that this business largely will continue to expand. Now, you might not be a Bitcoin or a crypto bull at all, but owning Nvidia does not mean you rely on crypto's success for appreciation. It could just be an added benefit. The true gaming industry is continually expanding as new players take to the wondrous world of gaming. There are also other future catalysts, for example, the metaverse, that will all require powerful video processing tools to construct a truly digital world. So, in the short term, gaming is hurting Nvidia, with revenues from the segment down 33% year over year to $2.04 billion. But the eventuality is that it will recoup and regrow. The third segment in Nvidia's product lines is professional visualization. This is what I like to think as everything in between. Professional visualization largely means any professional use case for Nvidia's graphics. These days, that has a lot to do with machine learning and artificial intelligence, whether it be to optimize or automize factory lines or helping in making more and more complex computer-aided designs. This segment of revenue is also experiencing a downtrend of around 4% year over year, but in my opinion, this is due to a larger uncertainty in macroeconomic indicators that I believe is leading to some reinvestment from individual firms. The long-term trajectory for this segment group is also very bright. As economic headwinds compress, we will see the continual stable growth in this trajectory. The $496 million in revenue we saw in this last quarter will eventually rebound. The last and final segment for Nvidia is the automotive side. Essentially, the automotive revenue is just a more niche version of professional visualization, with self-driving technology features being powered by Nvidia. Graphic cards are an essential tool for artificial intelligence, as there are a lot of repetitive information processing needed to make certain decisions, and as such, Nvidia is a pivotal player in the space. Some companies, like Tesla for example, have created their own solutions, but most will license Nvidia's technology and retrofit that to their own systems, or will use Nvidia's own proprietary Orin to facilitate their self-driving aspirations. Nvidia's automotive revenue is up 45% year over year, and will likely see continual uptrend as the space evolves from a test phase to implementation in the broader market. So, now we understand Nvidia's product and their business segments. So the question now becomes, what should the stock be valued at? To see if Nvidia is worthy of our investments, let's play a game and completely ignore current market cap. We will do some simple calculation on the current business and make projections for the future to try to get a fair value of the company. To do this, we will look at the company's most recent Q2 data. Keep in mind, this quarter is at the inflection point for Nvidia, going from an era of only tailwinds to now macroeconomic, regulatory, and even demand headwinds. So, the picture that this quarter will paint will not be indicative of Nvidia's future, but rather the present. So, to start, Q2 2023 for their fiscal year, revenue was $6.7 billion for Nvidia, up around 3% year over year. Gross margin came out to roughly 46%, a decline from 66.7% gross margin a year ago. Operating expenses rose 38% from a year ago to $1.749 billion, leading to operating income of around $1.325 billion, down 57% and 51% respectively. Free cash flow for the company was around $837 million this quarter, down from $2.5 billion last year at the same period. The numbers tell a story of a declining business, but good for us, we took our medicine so we can provide reasonable context to these trends. We know certain segments suffer from bringing forth a lot of demand due to external pressure, crypto for example, and as such, the decline in profitability and margins are indicative of not the company, but rather the shock that it experienced in the last couple of years. But nonetheless, at current levels with simple calculations without doing any discounted cash flows or any major projections, we can project yearly cash flow for this company to be around $3.3 billion. This is again down from $10 billion of free cash flow generation at a yearly run rate that was achieved a year ago in the same period. The historic average for the S&P in terms of price to earnings is 15. We can apply a price to free cash flow ratio of around 15 also. We're gonna use free cash flow because I believe this provides a better accurate representation of the heart of the company. So at that 15 multiple, we get a simple sticker valuation of Nvidia of around $50 billion. So, should Nvidia be worth $50 billion? I don't think so at all. Let's dig a little deeper. Applying the same math calculation to financials at the same time last year, we would get a fair valuation of $150 billion. To provide even more context, the S&P average for PE is contingent on companies having average growth. As we've seen, at the worst quarter of its business, it has its largest segment growing 61% year over year, and its other promising segment growing 45% year over year. If you normalize the growth trend for the gaming segment prior to COVID and external pressures provided by crypto, you will see continual stable growth. The gaming industry at a worldwide scale is expected to grow continually for many years to come, and new product launches will eventually stabilize old supply, resulting in fixation of prices. In fact, as stated, new product releases in the 4000 series just this past week demonstrated the pricing power Nvidia has on its products. All of this is to say that we cannot apply a simple 15 ratio to Nvidia. We must predict for our own investment philosophy what the growth rate for Nvidia will be, normalized to non-standard market conditions. Nvidia, from here to 2030, in my opinion, on a conservative basis can compound its business at a rate of 15% annually. This is higher than the average S&P company, and in my opinion, the market research points at Nvidia having superior pricing power, market penetration, and technology moat. As such, this 15% growth estimate is a conservative estimate to the way the technology will evolve in the future. I would place a much more aggressive price to free cash flow ratio for around 22 on Nvidia to highlight the higher revenue reward potential for this company as it has more room to grow. At those metrics, we can now take this disastrous quarter and project a current market cap of around $73 billion. Or, using the financial metrics from last year, we can get a simple valuation metric of around $220 billion. A very wide range, but it is indicative of the kind of market Nvidia is going through right now. However, this valuation does not take into account any future growth. We gave it a higher multiple because of future potential growth, but let's project a different way and take away a lot of the uncertainty in our valuation metrics. We're going to do this by looking at future revenue potential and consequently future cash flow potential and work backwards to justify a valuation in the coming years. If you would like me to emulate a discounted cash flow model, please let me know. But for this, we are simply going to project without a discount interest rate for ease of understanding. With our annualized, conservative 15% annual growth rate at a revenue run rate of $27 billion for this year, a lot of assumptions we are making, but we are estimating flat revenue for the rest of the year in each category. We can assume that revenue will be $55 billion in 2027. Projecting alongside with Nvidia's long-term free cash flow margin of around 29%, we can see free cash flow generation of around $16 billion in 2027. Estimating at that point a multiple of 20 on the free cash flow to valuation, as even in 2027, in a conservative viewpoint, Nvidia will still be growing, in my opinion, much faster than the average company in the S&P. And we can also assume the interest rates to be relatively same to the average levels in the past 15 years. We get a potential valuation of the company of around $320 billion. We can get even more accurate and start projecting all these valuation metrics by per share, which would take into account Nvidia's very aggressive stock buyback programs. But through this simple exercise, we did some very important things. We learned the company's product. We researched the context of the business as of the current day alongside its segment. We valued it based on current metrics and with our larger company context and segment research, and we produced a conservative viewpoint for company revenue in 5 years. All without looking at current valuations. Nvidia's market cap today is $328 billion. So, the potential business metrics for 5 years from now barely justify the valuation we are trading for today. Does this mean we don't buy the stock and that Nvidia is overvalued? No, not at all. This may be counterintuitive, but through our projections we took a conservative outlook at all metrics. In reality, the growth metrics might be higher. The product's value in the market might be even more compelling than I am predicting here. My engineering brain tells me that Nvidia's products have a very strong competitive edge in the market, and thus they will far outweigh the marginal growth estimates I put out here. But my investment brain tells me to be conservative in estimating growth. So, while it may sound weird, the value of Nvidia's future potential really depends on you. Buying Nvidia as of today, you are taking a higher risk, as the company definitely against current valuation metrics versus real business is trading for an overvalued number. The reason why we give it higher multiples is because we are assuming higher trends of growth. Now, that growth is estimated to be anywhere from 15% to 20% in our example here, but to you, with your context, to the way that you see Nvidia, it might be a different number. For example, if we compound the growth of Nvidia from 15% annualized to 20%, we get a fair value in 2027 of around $400 billion, with all the same margin estimates, and still excluding share buybacks. This is the beauty of individual investing. You make your own projections, and consequently, you place your money in your own research and projections. Relative to the market, I personally see better risk to reward plays. As such, I do not and probably will not own Nvidia in the short term unless there is a significant price compression even from here. But again, this is based on my research and my estimates. Always do your own research and maybe you will come to the conclusion that Nvidia should be the most valuable company in the world. With that, thank you guys for watching this longer than usual video. If you liked anything that I had to say, please hit that like button and subscribe, and I'll be back with more content like this. As always, if you have anything you want me to discuss or look at, please let me know. Thank you guys for watching one more time, and I'll see you soon.